Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what happened today. A bit of a wild day, I don't know. I have a lot of mixed feelings today, so we'll go over all that, what I'm personally seeing and feeling and, just understanding, I guess, from this movement today. So again, as usual, if you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below in the description of this video. For $3 a month, you essentially get access to all my thoughts, updates that I constantly give throughout the day as the trading itself is happening on anything on anything I see that's updated or new or whatever in the chart itself, kind of like what I do in this video, just live, if you will. Now, with all that being said, let's jump into it. Tesla up green today on kind of a mixed market day, really up about 1.5%, closing at just shy of 240, right? About $239 per share, we'll say. Which compared to SPY and QQQ, SPY pretty much didn't move today. QQQ up just a very only up 0.3%. So Tesla with a nice outperformance for sure, no question about that. Obviously, some rough day in the market for some not so much. It's very mixed bag today. But the thing that makes me a little bit, I don't know, so about it is just the way we close. So let's just quickly reiterate what even happened today, right? Obviously, a bit of a weak open to start, but then we had an absolutely astronomical rally. So a lot of people were saying Tesla's going to crash. Well, as usual, whatever. I said this, I think so many times. If the comment section is saying it's going to crash, it's probably not going to crash, and vice versa, right? So pretty much we had, if you were to just take it, just not even from the low of the day, just from yesterday's close, we ended up rallying about 5%. That's a phenomenal rally, right? That's a pretty explosive rally just for one day. If let's say you just bought at the close yesterday and happened to sell near the top, it's near 5%. That's pretty darn good, right? I did sell calls personally. I did sell calls not at 240. I wish I did at 246, but I did sell them closer to like 244. I did sell calls when we were at 244. But regardless, this is what I'm seeing, right? So there's a few things. It's a beautiful rally, right? We had a beautiful rally. We did get rejected by the 100-day moving average, right? We got pretty close to even 250 itself, but not quite there. But the thing is, we essentially got rejected by the 100-day moving average, which is that yellow line at the top. That's okay, I guess. That's, not too bad, right? It has been rejecting us, right? We pretty much closed right out of here. Then we went well above it. Obviously got rejected even further, then even closed below it, right? Got rejected by it again over here in this candle, right? Again happened today. So it's like the fourth time, if you can argue, that we got rejected by it within the last week and a half of trading roughly, right? So that's not amazing, right? We want to eventually break above it. But the thing that makes me a little bit perplexed, if you will, is the fact that, so we have a resistance up here. We have a support down here with the 21 EMA and 50-day moving average. And then we have that kind of medium-term mini tug of war, I guess, almost happening between this 240, 242 level, right? I really wanted to close above 240, at least. Slightly more ideal 242, I really did. The fact that we closed below 240 and pretty much just shy of it as well, 239, makes me very confused, mixed feelings, where it's not really bullish, but it's not really bearish either. It's just this weird limbo. We're in this weird limbo right now where it feels like the stock itself isn't really sure if it wants to rally, if it wants to crash. The buyers and sellers, it's it doesn't even feel like it knows where it really wants to go yet. So that's why, as of right now, if I were to just guess, it's going to go here tomorrow, I have no idea. I really don't. This is one of those few times where I'm not really sure. But however, with that being said, the best way to look at it, in my opinion, is still on a slightly more broader scale. And what I mean by that is essentially what I've been saying as well in the other videos, where there's just two really main levels of the bulls and the bears are looking at to break for a continuation in their respective direction, right? Again, for the bulls, right? Ultimately, yeah, we have this 242, 242 level. Yes, we have the 100-day moving average sitting around 245 almost, right? Yes, we have those levels. Yes, those are like the kind of, somewhat, decent resistances we have to break above. But the main one to look at, of course, is going to be pretty much 250. Obviously, since we're in a bull flag and it's descending, right, naturally that's going to slowly decrease. So right now, technically, you can argue it's 249. But to make it simple, we'll say 250. The bulls want to break above 250. That's what they want to do. They want to break above that. They want to crack 250. And they want to close above it as well and hold. And that will be a continuation up to probably 260s at least, right? Maybe 270s even, right? That's what the bulls want to see. And that will be very, very bullish. The bears want to see, obviously, the opposite. They want to see a crack underneath this ascending channel that we're in, these blue lines right here. They want to see a crack below that, right? Which at the moment, let's say it happens in theory tomorrow, is pretty much 231.5 roughly, give or take. But essentially, the easiest way to look at it is extremely low 230s, right? On top of that, they also really want to be cracking below 230. As you can see, we talked about this many times. We never really closed the candle below 230, right? Ever since we made this gap up over here, we never really closed below 230. We went below 230, but we never closed below 230. So that's what they would want to do. So that's like the main steps they're looking for, right? Break down out of this channel and really break down and start closing candles below 230 and especially below about like 226 roughly, I would say, right? That's going to be something that the bears really want to look at. Until then, this whole zigzagging that we're happening, this up and down movement between those two real like main levels, right? The low 230s to the high 240s, 250s ish, even like low 250s. It's just a game of ping pong, right? We're just ping ponging. We're just kind of deciding. We're consolidating. We're waiting for something, whether it's good or bad, whether it's bullish or bearish, to push us out of this congestion zone and to pick a direction. Now, obviously, because we're in this congestion zone after a decent rally, like if you were to take a zoom out and just take a look at it, right? Technically, you can even make the argument, the fact that we're in a bull flag here, a very small bull flag, like you can easily make that argument. So let me just remove this for now, right? But you can easily make the argument, the fact that let's say we're in a bull flag, you can even, this is like the pole, and then, we're essentially now doing a bull flag that looks something like this. Where's the thing? Why is it not showing this? Right? You can easily make the argument, the fact that we're just in this little bull flag right here. Let me remove these moving averages for now. Oops. Man, it's the same color, so I keep getting them confused. Go ahead and take that out. Let's go ahead and take this out. We'll give the 21 EMA for now, but you can easily make an argument, the fact that we're in this bull flag. Like we're in a little bit of a bull flag here. We're in a nice, beautiful rally from pretty much under 200, just barely up to about almost 250. Beautiful rally, and now we're just bull flagging, right? We're just going sideways. We're consolidating sideways, and from here, technically, again, this is why I always say I am still more bullish than bearish, right? I said this yesterday. I said this days before. I'll say it today. I am still more bullish than bearish. Yesterday's candle, the daily candle, is a little bit of a perplexing close. It's not very convincing in either direction, really. But if you zoom out and take a look at the overall structure, it is still looking bullish to me. Obviously, if we fall out of the channel, if we break below 230, I'll turn bearish. But until that happens, maybe it won't happen. But as long as that's not happening, I am bullish. And again, you can also look at this as being essentially a bull flag, where we're just now zigzagging in between, right? This bull flag, we're just going up, down, up, down, up, down, up, down, right? Something like this. Something like this could absolutely happen as well. And we break out. Again, since it's a bull flag, technically it's a higher probability, at least in my eyes, that it breaks out to the upside. But of course, like anything with the stock market and technical analysis, absolutely nothing is guaranteed. It is all just simply a probability basis. The probability is, in my opinion, in the bulls' favor, but absolutely does not mean that the bulls are guaranteed anything here either. So that's the main thing I'll be looking at, right? And that's the main thing I am still eyeballing. Now, like I said, when we did run up to the 100-day moving average sitting around this kind of 244-ish level, I did sell calls against the shares that I currently own. I'm just selling weeklies. I'm not selling long-dated calls. I was thinking of selling calls for pretty much either late December or like somewhere like early January, somewhere around the 255 to 260 strike price. But I chose not to. And the reason I chose not to is because, again, I am still overall bullish. This might take a little bit longer to really break out and potentially play out the bullish thesis that I have, which of course is going to be essentially a start of breaking above about, very, very high 240s to about very, very low 250s. There's that general range, like 248 to 252. I still think that's a higher probability of happening, which is why I don't want to do longer dated calls, because if it does actually happen, then it's not the most ideal scenario to sell calls here just yet. But if we start breaking below 230 or even breaking out of this channel, like in the very low 230s, I'll probably buy back those calls and then sell much longer dated calls as a hedge, because I think we'll be pretty much starting up what could be a downtrend back to the, teens, if you will, the two teens, right? The 215s, 216, 217, 214, like that general range. And if that breaks, potentially come back down to even the low 200s, like 205 or something like that. So, but that's the main thing I'm looking at, right? Again, like I said, just to quickly reiterate, very perplexing candle on the daily. Doesn't tell me much information. We're still dancing in between these moving averages, the 100-day moving average, the 21 EMA, the 50-day moving average. And I'm not super happy with the close today, but I'm not super unhappy either. As of right now, in my opinion, the best thing to do is just trade this little, swing trade, this little scalp, this little zigzaggy pattern that we still have going, which I have been personally doing. And pretty much until we really truly pick a direction, like I said, I break above 250, I break below 230 to make it simple. That will decide the direction for the bulls and the bears respectively. So take that into consideration. That's kind of how I'm seeing it personally. Obviously, the weekly itself is looking not bad. I did talk to my members about the weekly briefly. The weekly itself is not looking bad. Obviously, there's still several days left in this week before this candle closes. Obviously, there is some selling pressure being shown by these long wicks on pretty much 4 weekly candles in a row, but I still think the weekly looks pretty decent. Like, you can even make an argument that the weekly is performing a little bit of a mini bull flag in here with these last 3-ish weekly candles. We're closing above major moving averages. The 200s well below us. We're above the 100 moving average. We're above the 21 EMA as well. I think we're even above the 50-day moving average, which we are. 50-day moving average just crossed the 200-day moving average on the weekly, which is great, right? When the 50 is above the 200, that's a good sign. So the weekly is not looking bad. Obviously, there's still work to be done, but it's really not looking bad. Like it really looks like it has potential. And like I said, also many times, as we quickly remove all these moving averages so it's not too cluttered. We also have the squeeze indicator right here. That is obviously still showing yet another red circle, as you can see over here. So take that into consideration as well. Obviously, this indicates that there's a lot of pressure, a lot of momentum building up. And once this momentum is released, the move in whichever direction we finally choose, which I think will be to the upside, but obviously nothing's guaranteed, should be fairly explosive. I personally think Tesla is looking good here. I think it's looking more good than bad. But obviously, time will tell, and those major levels that I talked about will be pretty much the deciding factor. So with all that being said and done, thank you so much for watching. If you enjoyed, don't forget to hit that like button. And as per usual, I will see you tomorrow. Peace.